Hey, this is Sasha. Thanks for joining me in today's video. And what I want to share with you today is how to go ahead and analyze a stock chart very quickly, probably within about 10 seconds or so. So we're going to break this technical analysis concept down and just show you how simple you can really make it. All right, stay tuned. I'm going to share with you this insight in this episode. All right, so I think a lot of people overcomplicate their technical analysis evaluations of stock charts, or they go ahead and teach you the Bollinger Bands, MACD, stochastics, RSI, ADX. There's so many indicators out there. For me personally, I found that sticking to something simple, price and volume, really just keeps it easy. And, when you're looking at technical analysis, you're really looking at it as a guide. Really, it's just another point of view. In the end, once you get into a stock or an option trade or any trade, your focus should really be on the trade itself, managing the trade, managing the position. But I think a lot of people overemphasize the technical part. They put so much focus on it that it really clouds their judgment and they don't focus in on their position anymore. So when you look at evaluating a stock chart, I think to keep it really simple and just evaluate a stock chart in just a quick few seconds, I want you to start thinking about it in terms of levels. So we're going to go ahead and go to the charts here in just 1 second. And before we do that, I do want to remind you that we have a lot of great freebies here on our website at tradersfly.com. Check out the freebies section. You can also go ahead and get to the getting started page, option trading page, and a few others we're developing. There's also some great courses, membership, and one-on-one coaching if you're interested in that. All right, so let's take a look at some stock charts here. And here's a stock chart, for example, and here's a handful of all these different stock charts. So how do you evaluate these very quickly? And I think one of the easiest approach is to go ahead and look at an apartment building. Even though there's so many different ways to look at it in technical analysis concepts, when you look at it from an apartment perspective, this illustrates the example quite easily. So let's say a stock price is trading somewhere over here at this level, level 2, okay, meaning at the second stage or the second story. As it trades in this area, eventually it may break out and go to the next level. And now what's going to happen is you might be trading in this next zone, and this next zone is the third zone, okay? And then again, you're in here, and it could break out to this next zone. And this is the way I look at it, is that it just has different price zones. So in order to make this technical analysis work, all you have to do is go ahead and draw the different lines. So I might say, hey, here's support, here's your resistance, here's your next support, here's your next resistance. So just drawing horizontal lines makes it easy thinking about it. Hey, what is the next zone or level that the stock is going to go into? Yes, of course, you could do technicals that are a little more diagonal and you start looking at patterns and so on. That just makes it a little more advanced and a little more specific. And you could say increases your chance of getting into a little more favorable position. But in the end, remember, this is just slightly going to help you when you look at just managing your position is much more critical and important than just evaluating the technicals. So let's take a look at maybe an example. Let's just look at AMD here to start out with. And what I want to show you is just using this concept in a stock chart. So here, as we look at maybe a weekly or even a monthly time frame, I want you to take a look. This stock here, we're going to just draw some lines. So let's say you're kind of in this range, which is 2014, 2015, and you're looking at the range in that stock at that time. Okay, so what you want to do is you go ahead and you look at, hey, where's the kind of the resistance? Because you're interested in maybe going long in the stock and you're looking to invest. Well, as you look at this range, okay, well, you're here. Here's kind of the highs. Okay, here's kind of the lows. And as that stock starts to break out, okay, now it's going to maybe the second story. So you get into the next stage. Okay, where's the top of those levels? And again, you get into the next stage and the next stage and the next stage. And eventually it'll start pulling back, just like an elevator does. So that's the way you kind of can look at it in terms of these different stories and levels. If you look at it more of a macro view, you can look at it like this, where, hey, okay, I've got this level. And then maybe for multiple months, it starts going up. You got a few other levels here that, hey, stock's been going sideways for a while. So here might be level number 1. Then you've got level number 2. You've got level number 3. So you can see stage number 3 or elevator number 3 or floor number 3. Stock breaks out, goes to a high, And then again, you've got your next level, level number 4. And this will continue to infinity, really, when you think about it, up until the stock pulls back in a big dramatic way. So you've got these different zones and levels that the stock just continues to run and ramp up. And this is how you can quickly analyze and evaluate a stock. And that is basically it. And you can see how quickly I just went ahead and did that. Now, could I go ahead and start looking at things like, hey, this could be a possible pattern. How is the volume comparing as we do the breakout? Yes, these are things that are also important because volume goes ahead and tells you how much fuel and gas, how fast do I step on the accelerator of the car? How fast do I crank up my grill when I'm looking at how much gas I want to give it? So yeah, if you have more gas, if you have more volume, that's a good thing. If we have an acceleration of volume as well, this is also a good and healthy thing. But these are all just additional things to prove your theory or concept. In the end, price is key, right? Price is key because if price is moving up, the rest is kind of, it's good, it's supplemental, it goes ahead and verifies and confirms and puts more statistics and things in your favor. But in the end, price is key. So if you look at it just as an elevator concept, think of it like hopping from one stage to the next, that's what we're doing. And pick any stock. Take a look at this one here. We could look at this one, DKNG, and here's kind of a 2-day chart. So a little tough to read those bars right here. But here we can see that we went ahead, we went up. So are we going to continue moving up? In this case, we actually moved down. So we went down to the next level. Okay, but then take a look, here's our levels. And as I look to this, as we come into this level, okay, we went ahead, we bounced. Okay, what's the next one? Okay, sometimes the elevator just skyrockets pretty quickly, right? And then you have this next level and so on. Now, how do you find these levels? You're probably wondering, how are you drawing those lines? Well, all I do to draw these lines of kind of resistance or support is this. It's basically looking for where the stock changed direction. So if we get to a little bit of a high point, or a high peak, then that's where the stock changed direction. And where it changed direction, that's where it's at its highs. I draw a line from there and I see if it hits another high. And once you get 2 or 3 of those, that's where you get kind of, hey, that's your resistance point. And the same thing on the support. So let's say, hey, I've got this line at the lows and I see that prices tried to go up. I go ahead and draw that and you can see we've got a few of them that kind of isolate in that area. And this applies to just moving the price all the way over, right? So you can see that this one, we had a point here, and actually there's a point right there that also started to hit. We had points of support right here. And you can say it's not hitting it perfect, but I will always say, well, when you meet your friend for dinner at a restaurant, are you always meeting at exactly 6 o'clock? If you say 6 o'clock, are they coming at exactly 6 o'clock? No, they might come at 5:58, you might come at 6:01, they might come at 5:55. It's not always perfect. So the same thing here, it's a meeting place, it's confluence. So that's what it's going on, is it's just trying to find its price range. All right, let's look at 1 or 2 more, and then maybe you'll get a better sense of this. Let's see here, how about this one? Maybe United Airlines. Let's go to kind of the monthly. All right, so here, how do I pick? Let's just start way back over here, just so we can look at a different time frame. Here, the stock went to highs and started to retrace. So let me go ahead and use this as a line. So I'll draw this out and then boom, there it is. There's our next level. There's our next line. You can see we tried to hit support. Okay, here was another peak where we kind of rejected it. So I might draw a line right there. And there you go. There's the next level. Here's another level. Here's another little level. So as we go into this, we might say, hey, this is our floor number 1, floor number 2, number 3, number 4, and it continues to do this up until you get maybe a little too high and it starts moving in the downward pattern. So that's kind of what's going on. And eventually maybe, hey, the elevator just crashes, because here's what happens. You get to kind of the highest level in floor and you can't go any higher. Well, the elevator eventually has to come back down, or really in this case, you're gonna have to drop because there's just too many people on board. And that's what happens. So anyways, and then the process repeats itself. So you go back and look at the support all the way over here, right? So if you look at this support level right here, here's where all the other points were. Draw that line across and look, isn't that interesting? How it comes right back to the floor. And that's how you can really quickly analyze a stock chart. Now, could you also add in a price range and kind of movement like this, yeah, you could. And it's a break there at some resistance or support levels. Could you look at volume? Could I go ahead and add in moving averages? Could I go ahead and look at, let's say, Bollinger Bands? Could I add in AXD, RSIs, and all that stuff? You could. But do you really need to? The question is how deep do you want to get into it? In the end, it still comes down to position management and risk management, taking risk off the table. So if you had, let's say, 100 shares on a certain stock, and all of a sudden this stock is, going up. So let's say you got into the stock somewhere over here, okay? Well, as it continues to go higher, so here was your 100 shares, it'd be wise probably to take off 20, maybe to 50 shares. That's just normal basic risk management principles and concepts. So keep that in mind as you continue to trade and look at charts that, charts, they are important to some degree, but they won't make or break you. It, in the end, comes down to position management, managing your position, managing your cash, managing your capital. But do I like to look at charts? Yeah. Does it make me feel comfortable? Sure. But I think what a lot of people do, and especially talking to a lot of the coaching and mentoring people that I've done over the, actually over the last month as well, but over many years, now what I'm starting to find is when I do these sessions and mentoring especially, some people really just emphasize a lot on charts and they really make a big determination and decision based on the charts, not so much based on their position. So in the end, remember, position, your money, your management of that money is more important than these charts. Because once you're in a position, the rest goes out the window. It all then comes down to how's your position behaving. It doesn't matter in the end then what the charts are doing. It really comes down to your position at that point once you're in the trade. All right, so I hope you found this video helpful, insightful. Don't forget to grab some of those freebies by clicking the link right over here. I hope you go ahead and grab some of those. That's also where we share some announcements and news, live events, that kind of stuff. And feel free to subscribe on YouTube if you're brand new and you're just checking out the channel for your first time. Thanks again, and I hope to see you in one of my next videos.